It's somehow Thursday already, once again in this weekly Groundhog's Day lifestyle we all seem to be in. It's legacy time. Gonna talk about correlations, the VIX, and the uggo-looking charts on SPX and NASDAQ. So if you've seen my Thursday recaps in the past, you know I always talk about correlations first to legacy stuff. VIX in the top here in the line graph. This is the volatility index. If this goes up, there's general fear sentiment in the market. Volatility is high. People are sitting on the edge of their chair ready to sell at any moment's notice on any headline for any reason. So historically we've been, really 30 historically has been the high ever since Corona. And then Corona hit, spiked to like 80 aside from 2008. GFC as they call it across the pond, global financial crisis. And we've been unable to maintain a sub 30, sub 20, sub 25 VIX since Corona. The idea being that stuff is still not back to normal. I mean, and we can see that in the VIX as a proxy, at least back to normal for most people in most parts of the world. So if VIX is high, the correlation has been bearish for crypto. If VIX is declining or closer to zero, then we are more bullish on crypto. So bit of a divergence here because we're seeing higher highs in BTC on a massively high VIX historically. However, it is following the criteria of a declining VIX is bullish for crypto. So we always want to see VIX sub 10, sub 15. Rising VIX intra-week certainly isn't bullish. Doesn't give me a bullish sentiment per that correlation. Dixie DXY US dollar index is still extremely negative on the correlation, negative 85%. Gold is really at a maximum of negative correlation, which is good because gold looks super bearish. As I've been talking about for the past couple weeks, we'll look at that chart. It's really the SPX and NASDAQ charts that are concerning because the correlations here are near 100% and they look ready to just roll over completely. We'll take a look at that. This is the DXY. I said this on a podcast, Weekly Open, on Monday, that if I was trading this in a vacuum, absent of the ticker, I would say, all right, this looks like a bullish reversal. It's going through the cloud. It's had its bearish trend. It had a bearish trend retest here. It was a continuation because of the bearish TK recross below the cloud. Here we had a bullish TK cross below the cloud, which is a short close signal. So until this cross is bearish again on the daily, I would generally be trading this as a bullish move to the upside, which is bearish for BTC because of the negative correlation. If we get a US stimulus, if that passes anytime soon, maybe Dixie goes south or whatever other reason Dixie goes south, but it feels like stocks selling off, treasuries, bonds, that sort of thing, being bullish here is taking over as far as counter stimulus narrative. So this looks bullish to me, which is troublesome if you're bullish BTC. And here it is on the 4-hour. It's trying to maintain itself above the 200-day moving average, or 200 period moving average, which again is not bearish by any means. So a little concerning if you're bullish BTC based on that. Here's gold, which couldn't even make it into the weekly cloud. And honestly, the setting, these are crypto settings. So if I change this to legacy settings, which I didn't because I'm lazy, then this would match pretty nicely, I'm guessing, because it's 26 periods on the cloud position instead of 30, so it would already be in the cloud. Point being, this edge-to-edge move, which I've been talking about for weeks, is finally playing out, and it looks like it's headed to 1620, 1630, something like that. Probably headed for a date with the 200-week moving average end to this yearly pivot. There's just been no strength in gold at all, and none of this really makes sense if you think about it, because if I guess you could rationalize it that Corona is nearly over, so people are unhedging into bonds. I don't know. It doesn't make sense that gold is falling with stocks and everything else. The correlations there really don't make sense to me, the logical correlations. Really, if the sky is falling and the world is burning, gold should go up. Great. Stocks should go down. We didn't see that. We saw stocks and gold sell off and then both rocket up, and now gold is leading the charge to the downside. I don't know, it doesn't make any sense to me, but there is now a massive negative correlation with BTC there. On silver, it continues to look much better than gold does, obviously. This is the weekly chart. there was a massive white coffee and accumulation down here for 6 years, 8 years. I mean, I wouldn't want to trade this, obviously, right? Like, that's almost most of my life, 8 years. So much rather trade crypto because it's quicker. But if you're trading silver, sitting in silver, I still think it looks bullish. It looks like a white coffee and markup phase. This could take 3 years to play out, but I doubt it's going to hit sub 20. If it gets anywhere close to 20, I think it's going to be gobbled up. Definitely, especially based on VPVR there. SPX, and this is what I'm talking about when it looks rolling over, because it had a chance to bounce on the Kijun here. It didn't. It's going to cross bearish on the TK there. So the expectation is get out of your longs. If you're long SPX based on this, based on trend metrics, looks like it's got a date with Destiny at 3,500, 3620, something like that. Bunch of like rounded top fractals. It just doesn't look good. NDX is much more bearish than SPX even, and that could potentially be a Corona effect as well. Post-Corona drop, NDX has been much more bullish than SPX. There's probably some sort of rotation trade going on there as things get back to semi-normal. And on technicals, this again looks like it's headed to the 200-day moving average. It's definitely headed into the cloud. There's no bullishness on this whatsoever. Possible A, B, C, D trade there. It just doesn't look good, which is bearish for crypto if the correlations are super high. Here's GBTC. Everybody's been talking about it because of the negative premium. On the chart, it looks okay. The trend still looks intact. It hasn't tapped the Kijun on a close just yet. Massive bear div there playing out on RSI and volume. This could just be waiting for the 200-day moving average to catch up. It's hard to be bearish on this per se. Just the chart. Maybe you're bearish on the premium going to negative territory. I'd much rather see it at 0 or slightly negative than at a massive 100+% premium, but that's just me. This, if anything, this tells people to just buy the spot market. Why would you? You're either buying this expecting this to go back to 0 or positive, or you're just buying the spot market because then you don't have to pay the fees associated with GBTC. On the other hand, if you're in the US or somewhere else around the world, there are tax benefits to trading this in certain long-term investment vehicles, IRA, that sort of thing. So, but overall, the chart doesn't look too bearish. If we look at ETH, the Grayscale Ethereum Trust, it looks okay on the daily chart. It looks like the cup and handle potential is over. Maybe it's morphing into some sort of inverted head and shoulders thing. I don't know. It's shoulder, head. Doesn't look super pretty based on just price action, which is just a mess in general. But the VPVR says that most of the volume happened between 10 and 20, 10 and 25. So it's probably safe within the range at the moment. But if this breaks below the 200-day moving average, if it breaks below 12, then I'd start to get concerned. If this premium, which has been historically in 500% territory, 600% territory, if this goes to negative 50%, then the whole thing just might blow up. But what do I know? This premium decayed extremely quickly relative to the BTC premium. If you look at BTC 1 exclamation point, which is the CME futures, again, bear div there, that's playing out. Interestingly, the drop has been much less bearish compared to spot markets on BTC. You'd have to look at the trading days and the gaps and how this has reacted, but this looks much less bearish than daily BTC spot on the daily, even though that doesn't exactly look bearish. Just it hasn't pulled back as much, right? And ideally, this all just slows way down through March, catches up to somewhere near the 200-day moving average, and then we can go again through Q2. Here's ETH1 exclamation point. On the hourly, the new CME ETH futures. BNC just did a podcast with the CME ETH futures guy. Check that out with Andy. And this just, it's too early to tell what this is going to be, but it certainly doesn't look mega bullish. Volume's been okay. Interest has been okay, I guess. I don't know. It's too early to tell. Needs more time. It's a new product. Now looking at a few proxies for BTC, MSTR, MicroStrategy, Michael Saylor, which holds a metric ton of BTC, continues to sell off from the highs, hit the R5 yearly pivot. Regardless of what you want to say about Michael Saylor and buying BTC and debt, whatever products, the technicals told you be careful at the R5, right? Like, it's always interesting how this stuff lines up, and we can say it's a hindsight, but The point being, when anything approaches an R5 yearly pivot, be careful. Holding longs there, opening longs up there, because mathematically it just says it's improbable that it keeps going. It's down almost 50% or more from the highs, just a big ouch right there. Hopefully this catches up to the 200 and figures itself out, but it does not look bullish, obviously, by any means. No way you can slice that one. Tesla, which recently bought $1 billion or whatever it was of BTC, catching up with the 200-day moving average. I think overall this is healthy for Tesla. Tesla has just been on a parabolic tear for a while now. I'd expect to bounce between 420 and 520 based on the yearly pivot, based on the 200-day moving average, based on the consolidation point on the triangle here. I don't think this looks like it's in dire straits or anything like that, but definitely bearish. And lastly, Square, which also holds a ton of BTC and continues to innovate in the payments realm, obviously doesn't look as bullish as it was and probably has a date with the 200-day moving average. So let me know what you think about legacy markets in the comments below, and happy trading.